Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. A busy day today. We'll talk about yesterday's session and the third day in a row. We're getting a rally in the S&Ps after a sell-off. So we'll talk about the turning point in that and just the general action from yesterday. But we have a lot of other headlines as well. We have earnings. We have Broadcom and Symantec talking. We have IAC potentially spinning off their stakes in Match and Angie. We have AMD announcing a new chip and Google and Twitter as customers for that chip. We have Lyft on top of their earnings report moving up their lockup expiration like 6 weeks. We'll talk about that. So a lot to get to on our show. Our guest, Mark Chaikin, will join us at 8:15. In the meantime, Joel, what's the word here overnight?
S&P futures in the green by 7.5 handles at 28.88. Pre-market high 28.96.50. Pre-market low 28.70.50. Pretty good level. I'm just looking at 29. If we can get back over this 2,900 level, a couple closes here, I think you got another V bottom on your hands. On the downside, buyers are going to have to step up, way up from yesterday's low at 28.50. Pre-market low 70.50, not much below that. I have a daily number at 28.65, but 24 handles above that. I think if you want to get long, you're gonna have to try it ahead of that level. Crude up $1.02. Dennis was calling to test that low of the move. We did yesterday, but rebounded here up $1.01 at 52.10. Gold big day yesterday, down $10.60 after some profit taking at 1309 or 1509, still above 1500. And silver down 17 cents at 1702. That's holding the critical psychological $17 level. And Bitcoin's now doing the dance around 12,000 here. That's basically Bitcoin futures unchanged at 1195. Triple D had on a swivel again this morning.
Busy days. I'm starting to get tired. I mean, this is just a whipsaw trading action. It's 3 days in a row where the S&P futures have been smacked around after hours, closing near the lows again last night at 8 o'clock and then rebounding overnight. I guess it was this one thing that came out there, where they were pegging it was, I guess, better than expected, and the market rallied on that. But it's amazing. It's like Groundhog Day around here, where it seems like, at 8 o'clock at night, and when the stocks actually close for the after hours session, we're sitting down 10 handles. And you think, okay, well, it's going to be a weekday, and it's coming. It's a completely different story. So we're up here again. We saw this yesterday. Obviously, the market turned around and started crashing then, and then came all the way back. But I mean, the buy the dip mentality is still here, and you can't argue with it. It seems like every time we sell off, we just rally right back. Yesterday morning, we were actually trading flat after an overnight sell-off, and then we started giving it back while we were doing the show, and we talked about that, how far we fell during the show. It continued after the open. We got right near the low from 3 days ago, so we got down, and we talked about these double bottoms, Joel, 282.04 on the SPY, 281.72 on the SPY from 3 days ago. So it tested that, did not take out that prior day's low, and then they just started slowly buying, and they kept buying it all day until we finally went green. So you have a day where you're down over 500 Dow points, ends up closing green. Incredible resilience, this market. So the bears have food to chew, and they have lots of stuff to talk about. But I tell you, the buy the dip mentality is still out here.
Yeah, that's kind of interesting. I guess that low, I guess it was Monday PM. I mean, that was almost like a fake low, when we had that complete washout. And that was on the, more tweeting and more WAN news. And so yesterday, and it's a great example, yesterday it was coming into Monday's low. And I was like, the real low of the move is, 27.70, 27 77.75, but that kind of was a fake low, that was quick. It traded down there and it popped back up, and just a little bit. I was looking for a little bit more, but we didn't get it. We got a nice rebound now, up 10 handles, but boy, oh boy, do we have like a bunch of news to cover. So we're going to let Spencer steer the boat here and cover as much as we can.
Oh God! Oh man, I don't even know what.
Start with the AMD news.
All right, we'll start with the AMD.
I'm going to take over and just steer the first.
Okay.
Okay, go ahead, Dennis.
Yeah, the AMD news is big. A couple of headlines here. Not the existence of the chip that's news, but who the chip's customers are going to be. We knew that AMD had at least a couple of chips coming down the pipeline in the second half of the year. They announced yesterday that their new EPYC processors will have both Google and Twitter as customers, and that is sort of what prompted the spike. But so it's a two-parter. It's A, here's this new chip, and B, Google and Twitter are going to be using it.
Yeah, so this happened right at 7 o'clock last night. So they were talking about the chips already prior to announcing the Google deal. But as soon as they mentioned Google at 7 o'clock last night, AMD just blasted off. And I'm like, as soon as I heard Google, I was like, buy AMD. And I could have bought it up like 25 cents, 20 cents, but I was like, you just see it and you're like, I don't want to chase. You're second guessing it. It's easy to say hindsight's 2020, the thing's up 6%, but you're paying up 1% for it, and you're digesting very fast all the news on the fly. Is this for sure real new news? Because you even said, Joel, that you thought you had heard this before. Apparently, the market hadn't, though, because it's up $2 now. But it just kept going, and so as soon as I couldn't get long AMD, I turned around and shorted Intel. And that was a good call. So I was able to get short Intel, just I think up in the 46.60 area, somewhere in there. And it's obviously trading down at 45.85. Now I'm still short Intel. I will be covering this. This is just a day trade, but it was a play off that headline. So this was a headline play. I missed the AMD, so I did the next best thing and went and shorted Intel.
All right, what a wild ride for AMD. This
really is. I mean, the low of the whole move is going to be that fake Lisa Su news. I mean, it was ridiculous. The stock trade down 5% at one point on that fake headline, and we'll call it fake news. I don't know what the place was that broke it, but whatever their source was obviously incorrect. It got and obviously immediately the stock got back up when Lisa Su came out and said, look, this isn't true. But anyways, we look at it now, and what a buying opportunity that was, because now you're up here at 31.20. Now you're back into the middle of the remove. So the sell-off, they seem to give you 3-4 days on the good ones, and then they turn around and start buying them. And we saw this with Netflix too, even after the earnings report, although Netflix has continued to go lower because of the overall market. But after the third or fourth day, you can see the wicked little rally that it had, where it went from 310 up to almost 335. So it seems like after 3 or 4 days, they start to show some life. And AMD, third day here, it's showing big time life, but this is thanks to that Google announcement, that headline.
Trading on the highs of the pre-market session right here, right now. Got two targets for you AMD bulls out there. 31.48 was your low on August 1st, so that's the monthly high. We're getting close on that. And then above that, 32.30s. But this 31.50 area is an area of interest. $5 rally, over $5 rally, or $4.50 rally since that low 27 print. So that's what I'm looking at here in AMD. Where to buy this on a pullback, I really can't tell you. This thing is just stepping up. So we'll keep an eye at 31.50. Let's see what's going on in Intel here. Intel trading down here. Let's see what happens. Yesterday's low is way down at 45.97, Dennis. So maybe you'll get a look at that. Well, actually, it's trading 45.75, so it's trading below that.
There's been one seller here, and
okay.
They were in the after hours. They're still there. They're trying to sell 74,000 shares. They were like 80,000. They've been moving around trying to get down there at 75.90 now. I'm kind of keeping my eye on him, but just not order book watching.
How do you know?
I don't really know. Like this is bad news for Intel. I mean, what is good news is for AMD is often bad news for Intel. In this case, it's literally they're they lost this deal to AMD, so it's not good news for Intel. And you know what else? Just to talk about the Intel story, that thing was $55 after hours on that earnings report. Remember that? That was a week and a half ago when Intel reported. That was a gift. And I remember we were saying, I don't even understand it. I said this on the show. If you go back to that show, I was like, I don't understand this. They've completely forgotten about everything. And they're sitting here buying it up on lower expectations.
I remember
and
that.
It was a gift. And the thing is right back down here near the low. So, people who are chasing price get hurt. If you were chasing it that morning after hours when Intel trade, you won't see it on your charts because your charts, and for all your providers, don't chart the after hours session. But it was up over $55 on that earnings report. Is now $45, 8 sessions later. So moral of the story is don't chase. So if you're chasing AMD this morning, it's the same thing. I mean, yeah, sometimes it works out. And in some cases, I would have been good to chase AMD up 30, 40 cents last night. But when you're chasing these $2, $3 moves or 10% spikes on news, I mean, it's really good news for AMD. I would be a buyer of pullbacks here. But if I want to own a stock, I'm usually buying pullbacks. I'm not buying the spikes.
All right. Spencer, more news.
Let's go to the earnings, I guess, because we have about a dozen or so, what I would say is big earnings reports today. And I want to start with Lyft because this one's interesting for a few reasons. So Lyft beat on the EPS, beat on the sales. The Q3 sales guidance was above estimates. The full year sales guidance was in line, but they were very bullish for the rest of the year. They said their total riders, 21.8 million last quarter, up from 15.5 million a year ago. And they also said, they kind of snuck this one in here at the very end of their letter to shareholders. They said that due to some agreements with the insiders and the underwriters, they're moving up the lockup expiration date. So the original—
How much are they moving it up?
I'm getting there. So the original date was September 24th. It is now August 19th. And let me pull up the exact number here.
Moved it up a month.
They moved it up a month, and they expect approximately 257 million shares to become eligible for trading on August 19th. Now that's more than the current float right now is like 177. So that's more than the entire float that is eligible for trading right now, and they expect that amount to become eligible on August 19th. So potential fireworks on that date for Lyft. August 19th, the new lockup expiration, and they're very bullish for the rest of the year.
The headlines, and this just shows you sometimes these algos just get it dead wrong. And this thing was trading up $6 or $7 last night. You can see it in the after hours chart. This thing spiked big time.
68.53.
Big time. Where do we get to?
68.53.
It was up $8. And they came out with that headline that the lockup expiration was going to get moved up when that headline broke. And they took it all the way back to scratch. What's going? They took it back. Look at those two candles. You can't even believe them. So they go all the way up. It goes up 10%, and then comes all the way back down and goes red. And now it's, it makes sense. It was a good report. I mean, whoop-de-doo-da-day. So they're moving it up a month. Is that really going to knock 10% off your market cap that you just gave it for this good earnings report? Probably an overshoot on the good earnings, which maybe was, to go up to 68. So the algos overshoot there. And then they definitely overshoot on hitting it all the way down to red because they moved that lockup expiration month. So rational human thought, if you humans were out there buying that pullback, congratulations, because the rational human thought trumps algos every single time. So the algos are fast, but they can't think. And that is why I still have a job, because I would have been put out of a job by all your high frequency traders a long time ago if I didn't have a brain. Algos do what they are programmed to do. They can pick off, for instance, a vitamin shop this morning, BSI, gets taken over. Okay, they're going to move up and they're going to move the price up and they're going to pick off whatever is out to lunch because the price was $6.50. So they buy $5.55, whatever they can buy. But so that's easy. You can program that in. It's an easy headline read. Stock gets taken over for cash at $6.50. We'll buy up to $6. So that's easy. But when you have interpretation, that's where the algos just aren't there yet. Maybe they're going to get there eventually. Maybe they're going to eventually, and then we're going to be Terminator and they're going to kill us all. But, joking aside. But we still can compete. The people who say you cannot compete with algos don't know what they're talking about. I'm living proof. I've used some algorithms, but for the most part, I'm doing news interpretation. And there was a huge opportunity last night with Lyft to just say, hey, okay, Yeah, they're moving it up a month, but this was still a pretty good earnings report. I'm going to buy some at 59 and 60, and the stock has ripped and it's continuing to move higher. So you're getting rewarded for thinking. Thinking gets rewarded in this market.
You know, what was another thing that that I would say they're eligible. I mean, eligible. Does that mean they're coming on to the? Are people going to sell? I mean,
Well, that's always the way the lockup works. So.
Yeah, but you don't know for sure.
No, you don't know. They don't have to sell. There can be a lot of people that don't sell, probably.
Yeah, exactly.
So you don't know. I mean, sometimes these lockup expirations don't even knock the price down. A lot of times they do. A lot of times they're predictable events and they start to leak ahead of it, as you've got algos that are trading ahead of it, and humans that are thinking that it's going to come in. I mean, there's just trying to get ahead of the trade. I mean, that's the whole name of the game. But it's still moving it up a month. It was still going to happen. It wasn't like they just added more. They just moved it up a month. So it was still going to happen. So that's why it was such an irrational move to knock it down $8. It was irrational to be up $8 in the first place. But to give it all back was even more irrational than the initial move.
All right.
Often very irrational.
Cancel your bids in Kraft Heinz if you have any, okay?
Well, it's going on Kraft Heinz.
They're going to
so they said something on the call, I think. They had earnings this morning, and then they said that...
Were they supposed to have earnings? I didn't have them on my list.
They were not on my list either, but they said...
They must have just pre-reported.
They concluded that the fair values... I'm reading it from Reuters right now. The fair values of certain goodwill, intangible assets were below carrying amounts. And...
boy.
Q2, yeah. So that's interesting. Their earnings that they came out with this morning, I don't know if there were estimates, but they were dramatically lower on a year-over-year basis for the EPS and lower for the sales, and just weak across the board here. All their numbers were bad.
But
this is a disaster story all the time. This has got to be one of the worst stories. You think about where it was at $90 a share, and now it's 28 and 29. And I know you still have some, Joe. So I'm sorry to talk down on your stock. I got lucky out of this. We both me and Joel bought at the same time. I sold a 10% spike back when it was like $58. I got lucky to get out of it. I kind of wanted to rebuy it on the way down. And now I have no interest in this whatsoever because this just looks like a completely broken story. I'm not going to get interested until they can prove to me that they're turning it around. I still think you have perimeter shopping at the grocery stores where people aren't going and buying prepackaged goods as much as they were in the past. People like to eat fresh. They're more health conscious. Kraft Heinz, yes, they have some good food as well, but a lot of this is prepackaged stuff that just sits on the shelf for years. People aren't buying that kind of stuff. They want more fresh stuff. It's the consumer trends are changing. Yes, they sell ketchup. People are always going to eat ketchup, but there's a lot of their other stuff that I think they're maybe struggling with. This is just my thoughts, and this is what I try to do. I try to put logic to the market, where everybody else just trades on headline and everything else. When I've got the investment hat on, which I'm putting it on here right now, I'm trying to think logically. And I think the same thing with Campbell's Soup. I mean, are these, and Kellogg's, are they going to start struggling the same way? I don't know. There hasn't been the sell-offs. Like Kraft Heinz has definitely been worst of breed. But what happens with the other ones? I'm not sure. What are your thoughts here? I mean, you still have some...
Yeah. I'm saving it for a tax loss at the end of the year.
Well, that's what happens eventually sometimes, and I've done that too, where eventually you just write the thing off. But
this might be my worst holding since I never sold the Lucent. We were talking about this after the spinoff from AT&T. And I don't know. I got a chunk of Lucent. I don't know. Wasn't Lucent like $100 stock at one time, Dennis? Before it cratered. I was trying to do some research on it, but Kraft Heinz, step down seller here. Someone wants out. They want out bad. You're filling it. You had a gap here. So if you're technically trading, 28.95 fills a gap from June 6th. But below that, I mean, you want to hold out for 26.96. That was the multi-year low. I believe an old-time low since it did the conversion. So there's your major support. I see a couple lows right here at 28.30, 28.40, but the low of the move has been 26.96, and we kind of got away from Lyft there on the news. It's just really quiet here at 64.5. Let's get into the 65 handle, 65.35. I see a pair of highs there. So that's my first target in Lyft. But Kraft Heinz, not looking good. And I use another word to describe it on the pre-market show, but I can't really use that word right now.
Incredible that the stock, what is out of favor stays out of favor. I mean, it's been a disaster to buy stocks. Like think about General Electric. Think about how long that has been out of favor for. Think about Ford. Yes, it's had spikes, but if you look at the overall trend, these overall trends just stay intact. I mean, Ford has been in a downtrend for 6 years. From 2014 was $18 a share down to $9. You could even argue farther than that if you really went out even farther on Ford. But General Electric's the same story. It's been a downtrend for the last 2.5 years. And now it's $9. And yes, is there value here? Potentially. But I mean, these have been all value traps. The oil stocks are all the same thing. It's like Groundhog Day around here too. They continue to go down every single day, it seems like. I mean, oil is getting a little bit of a lift here in the pre-market, but how long does it last? Maybe we did bounce off that low that we talked about, so that's still good news for oil. But you look at Apache, APA. I tried to buy this thing in the long-term portfolio. I thought it might be a play when APC got taken over. I thought maybe they would come and scoop up some of these other oil stocks. They're not doing it. So I sold APA at $28 for a $2 loss, and it was a very good move because now it's at $22. Halliburton, HAL, continues to go down. We talked about it yesterday. Schlumberger is just awful as well. I mean, all of these stocks just continue to go down.
Hey, Dennis,
trend is not your friend.
Dennis, I'm going to interrupt you. I completely lost track of time here. I'm going to bring on Mark.
Sorry.
Oh my gosh.
Perfect.
That's so rude of us.
It's okay. I totally forgot it. Apologize. Mark Chaikin is with us now from Chaikin Analytics. I'm sorry, Mark. I got carried away. We lost track of time.
That's okay. I'm listening to Dennis talk about all our bearish rated stocks in the end.
I just got to look. If I look at this, if I look at your power gauge, I will see all the stocks that I hate probably on your bearish ratings because I agree. It's just what is out of favor just stays out of favor. These oil stocks, what are your thoughts on these oil stocks? I mean, a lot of them look like they're going out of business, and I'm starting to think that they are.
Well, they're like death right now, and with the China trade, problems, we're going to lose a big export market unless they, nimbly get back on track. So, we're the biggest producer in the world right now, but there's a huge glut, and storage becomes a problem. And, the Halliburtons, the Schlumbergers, that's offshore drilling. You're not doing offshore drilling. You're doing, the liquids right now out of the ground. So very tough for these companies to rebound.
Also, just talk about the opposite end of the spectrum. I mean, you see the buy the dip mentality of this overall market. We get dips overnight. The last 3 nights, we've dipped significantly, and those dips have been bought. Even yesterday's early morning sell-off, we were down 500 Dow points. We closed green at the end of the day, but it's the same stocks that seem to turn us around. It's the leaders continue to lead. I mean, we have Roku here overnight. That's $118 here now. I mean, this is up 18 points here. It seems like the leaders, those are the ones to buy on the pullbacks, the ones that have been trending up, the ones that continue to find, buyers. They pull back a little bit. That seems to be where the opportunity is.
I wouldn't be too seduced by the strength we're seeing this week. This was what was normal after a big shock like we had on Friday, Monday. So typically the week after that kind of a shock, or Thursday rather, you see the market trade higher. But then we end up with the seasonal period here in August into September where you typically have, I'd call them illiquid or thin markets with the traders on vacation at the end of the summer. So these rallies here may be an opportunity for traders to take some money off the table. And you're right, it is the same names. It's the FICOs, the strikers, some of the aerospace stocks, medical looks really strong. But I'm not thinking that this rally is going to stick. So I think this bounce we're seeing in the post-shock week is going to be reversed, and we may see lower lows below 28.30. That's a key support level. That's a level where some of these algo traders, they call them gamma unwinders, will see another wave of selling coming from them. The guys who are on the other side of the put hedges that people put on.
So if we are going to continue, where are you looking here? Like, which stocks are you looking at if you were looking from the short side? Like, if you think we're going to start to continue to show weakness or to roll over again, where are you looking?
Well, here's the problem. The shorts haven't rallied. I'm looking at Netflix. That traded under 300 yesterday.
Right.
I'm looking at the Halliburtons of the world. Obviously, Tesla is a stock I haven't liked for a long time. Very tough to find good, comfortable entry points for the shorts. As you say, people are avoiding them like the plague. So pretty tough. I mean, you might have to do it with an index option, which gives you some broad coverage across the markets. You know, the SPY puts very cheap, even with the pickup in VIX. You can play a downtrend using the SPY puts. But the stocks that I really think are going to weaken are very tough to short. Maybe a Zillow, but they've already reported now down 15%. You know, that was a rally based on hope. Guidance is pretty.
Is Mark faded out here a little bit on us?
I think we got him. He's still.
We just lost the last thing you just said.
Okay.
We lost you at Zillow. We lost you for about 5 seconds there. I'm not sure why.
Yeah, it's the internet connection up here in Connecticut. But
okay, no problem.
Bottom line is the short side, you've got to be really nimble. I'd almost rather play them with index options unless you can do a put option ahead of a blow up or a potential blow up like a Zillow.
I just want to ask you about Tesla here. We're on the line with Mark Chaikin of Chaikin Analytics. He joins our show every couple of weeks, give his perspective on the markets. Going back to Tesla here, isn't it acting kind of good here? It had the earnings report just on a technical basis. I'm not going to go into any of the fundamentals of this, but you know, you had to drop like after earnings. I think Dennis maybe mentioned, you know, another stock, you know, not as loved as Tesla here would be right back at the low of the move. But this technical resilience here is, you see anything? Is that, I don't know if that moves the gauge or not, but just the relative strength of Tesla here, does that make you a little wary of the short side?
Well, the money flow coming into it makes me wary. On a longer term basis, this is just a big underperformer. Tesla, you've got to really pick your spots to short it. You got to short it when it looks good, in essence. So up around 260 is a level I'd short. I think the fact that it hasn't even come close to 260 on this rally off the 222 is significant. But I'm not going to press the bet on Tesla. It's just an example of a name that is still.
Lost you, Mark. All right.
He'll come back here in a second. He was talking Tesla.
Roll cars out.
21st century internet problems. Yeah, he's back. All right. Sorry, Mark. We
Garage internet isn't where it's isn't as good as city internet.
Wait, Mark. Wait. Finish that thought for us though on Tesla. Where would you go with it?
This is a stock where you don't have to press the bet here. Netflix to me is clear cut. Tesla can sort of doctor up the numbers, get cars shipped out of lots. Who knows where they end up? It's clear that they're cannibalizing their business with the cheaper car, which looks great, drives great, everybody loves it. So that's a problem for them. They're selling more cars, but they're not making any money on them.
Mark, what would you do with Lyft and Uber here? Lyft had earnings this morning. Uber, I believe, is after the bell. What would you do with either of those?
I think Lyft is a sale on strength. I don't believe they have a long-term business model that's viable. They don't have something like Uber Eats. I think, you know, Uber is a brand. Lyft is a taxi company. You know, Uber has the self-driving car potential. They've got Uber Eats now, which is starting to get in traction. I'm just not a big fan of Lyft, and that goes back to the original premise that it's a taxi company at the end of the day, whereas Uber has other things going on.
What other specific stocks are sort of on your radar here?
Well, the stocks I like are the medical stocks, specifically Stryker, Medtronics, and Zimit. And then some of the specialty names like FICO, which we've liked, which is wildly overvalued, by the way, on a PE or on a PEG ratio basis, but has a pretty good lock on the credit score market. That's my biggest problem. I'll tell you the anecdote that really stuck with me. Someone called in to Cramer's show last Thursday, which I was watching because the market had crashed. And they said, well, I made a lot of money in FICO, Jim. You don't seem to talk about it. And he said, you know what? There's a stock I haven't followed. I guess I'll take a closer look at it. And taking a closer look at this stock when it's 80 times earnings is, not going to be fruitful. But yet, these are the stocks, as per Dennis's comment, that they're just going higher. And they're in blue sky territory. It's a selective market. That's part of the reason, you can blame it on the Trump tweet, but the market was set up to fall. I don't know if you follow these Hindenburg and Titanic patterns. The plain and simple is when you got a lot of stocks making new highs and new lows and the market is near its highs, that's an under the hood warning sign. And that's what we had heading into that Trump tweet last Thursday. So it's a tough market here in the short term. I think intermediate to long term, we're fine. So I don't think panicking down near the lows is going to be productive for investors. But traders, I think, should be looking to sell this rally that we're seeing this week, particularly if we get a little more traction today and tomorrow.
What would change your mind on that? Technically, we've had these V bottoms. I mean, I think we're in a really interesting area. You have some quarterly levels right here at 28.85. I mean, to me, I just clearing 2,900 here, whether it's the cash or the futures. That's kind of my line in the sand here. What would make you kind of say, okay, there you go, another V bottom. You weren't buying Monday night or Tuesday or in the crash yesterday. You missed it. You're going to have to buy it on the upswing.
I think you nailed it. The cash trading above 2,900 is what I'm looking for, or a breakdown below 28.30, which is where we double bottom this week. Okay. 28.30 again is a level where these hedgers, what they call the gamma traders, start unwinding positions and they've got to roll their hedges. And so if we break that 28.30 level, then we're full blown into the 26.80, 27.30 area. But if we can close above 2,900, that would be impressive. And I think some money would come rolling back into the market from some of the algo traders as well, the CTAs with the risk on, risk off models and so forth.
Oh, go ahead, Spence.
No, I was going to ask from the chat where someone asked about the FANG stocks, Mark.
It's a mixed bag. They're all over the lot. Apple not acting well right now. Neither is Facebook. I'd say in general, the FANGs are not playing a role in this market. Google actually had a pretty decent earnings report, had the big spike up afterward, and now it's pulled back to support. I might be a buyer of Google in here at the 1150 level, or may put on an options trade there. It's filled the gap. Money flow has stayed strong. Chaikin money flow is positive. It's got a bullish rating. I think of the FANG stocks, Netflix is a clear-cut loser. Google seems to have gotten their act together in a sense, both from a messaging point of view and from a cash flow point of view. And Amazon, Apple, and Facebook, I'm neutral on right now.
All right, we've been on the line with Mark Chaikin. He is the founder of Chaikin Analytics. Mark, as always, thanks for your insights. Very much appreciated, and we'll talk to you in a couple of weeks. Hopefully, the market's a little bit calmer.
That'll be the next and last country broadcast. So,
all right, back to Philly after that.
Winding down. Yeah, back to Philly. Enjoy, guys.
All right, 8:34 here, guys. Sorry, we were a little bit late on Mark there, but any bounces that happened since the number came out at 8:30?
Oh, there's always bounces out there, but the S&Ps continue to show strength here this morning, up 10 and 11 handles here, call it 91.50. You know what a good target today would be on the upside, and I can't get this number out of my head. 29.1350. That was the low from last week. And if we, that's not too far away here with the way that market moves. So there's really no clear resistance there. I mean, psychological 2,900, but that'd be a nice target there. 29.1350 on the downside here. If you want to buy this thing, gonna have to. I don't know if you're gonna get a good pullback. I don't even know if you're gonna get a pullback to 28.84, but that's what I'd be looking for.
I pulled back there twice. If you pull back there the third time, it makes me think we're going lower. So
Yeah.
I don't think you're going to get it either. I think on pullbacks here, like last night, we got a little bit of a pullback there. They're buying it. I mean, they're just finding reasons to buy. They continue to find reasons to buy this market. It's the whole reason why, you get nervous and you think, oh, maybe I should start selling out my investment portfolio. It's the worst move to do. I mean, it's been the worst move for the last decade to turn around and sell.
Had me shaking earlier in the week.
I was shaking too.
I was like, oh,
But I ended up buying stocks. I bought Cisco, I bought First Solar, I bought Square. A little bit early. I didn't quite get. I had a whole pile of Square to buy down if I got near 61. I didn't quite get there. Cisco, I almost got the exact low. I think I bought 51.10 because I was playing it off that May low. This is in the long-term portfolio. I obviously do a lot more trading in the short-term, trading account. But I put Cisco in there. I said I wanted First Solar. I put some of that in there too, although I was early on the First Solar as well. And I bought some Square. I bought something else too. I can't remember. But anyway, so I did do some buying. I wish I would have did more buying. I mean, it's always seems like when the ones like when I was getting filled on Cisco, you're kind of puking a little bit. The stock's down 5 points in like 4 days, and you're like, holy cow. But I wanted the stock for a while, and I'm like, it's going to give me that opportunity that May low. I was like, throw the order out there and close my eyes, and it worked out, and it's working out. I mean, it hasn't worked out because it's in the long-term portfolio, but it's looking okay. So I mean, this is the way this market is. It makes you feel sick to your stomach is the best time to buy in a long-term account.
All right, let's go to Roku.
Roku, one of the dozen or so notable earnings this morning, probably more than that. There was like 100 reports, but Roku reporting yesterday after the close. They beat on the EPS. They lost 8 cents versus a 21-cent loss estimate. They beat on the sales of $250 million versus $224 million. The Q3 sales guidance was higher than estimates, so beat across the board for Roku.
Stock's unbelievable. It's up 16% here now. I've not been in it. I'm not going to enter it now up another 16 points, but everybody who's in it, good job. I mean, it's been an unbelievable performer. It's got to be one of the best stocks of the year. Started the year around $30. It's 117 here now. Valuation makes no sense whatsoever, but it doesn't matter. What's hot is hot. What's not is not.
I wonder how many people actually in the chats here. Just let us know if you use Roku. Obviously, I don't, but
I do.
A lot of people don't even know they use it.
Really?
Right, Spencer?
Probably
built into the TVs, some of it.
Well, yeah, but it's like it's software, like so, like
Okay.
like it's like it's like Microsoft for TV. So like you might not realize everyone knows they use Microsoft, right? If they have it, so it's sort of like an operating system for your TV. So I don't really get why it trades in lockstep with Netflix a lot of times because it's a different thing entirely. It's streaming, yes, but Roku is the pipes, Netflix is the content. And their businesses are completely different, but it does tend to trade with Netflix a lot. I don't really get that, but you're right. It is a beast. I am surprised it is higher this morning because we talk about how stocks that run up ahead of the report need to blow it away, and they beat, but it wasn't the greatest report in the history of earnings reports.
It got hit a bit on the Netflix report,
and
I think the bar was set a little bit lower because Netflix disappointed. Netflix been in the doghouse, so I think that's a little bit to do with it too. And obviously they're still performing.
Well, I'm going to go with what Triple D says on this one because you made I know you didn't trade it, but Weight Watchers yesterday, you were like, well, yeah, I'm giving my pre-market resistance and saying, if it takes out 27, that it's bullish. That thing was a beast yesterday. I mean, unbelievable. Wow, Weight Watchers.
And I talked with the two sides. I really couldn't make a call on this. And I said it's difficult to come in here. I said, yes, it's a big pop here for the stock, but I just putting in perspective. I mean, the stock is down from $100 earlier in a year ago. So I'm like, could it continue? Yeah. I said if I was in it, I'd be ringing the register. It's what I would do. Obviously, that was the wrong call because if I was ringing the register when it opens at 25, I mean, it went to 30. So I was kind of wrong on this at the same time. But what I said was I'm definitely not shorting it because this thing could keep ripping, and it did. So I don't know if that's a good call or not because I obviously if I was in it, I would have rang the register probably a hell of a lot sooner than 30.
All right. So Roku, I just want to give you guys the pre-market high there, guys and gals in the chat. If you're looking for a target, it got up to 119.29. Only a buck 29 away from that. Really, no resistance, nowhere to hide. The former all-time high, that was at 112.79. So if you're looking for support here on a big downdraft, that was the former all-time high. Old resistance, perhaps new support today in Roku.
All right, I want to talk about IAC here. So they had earnings yesterday as well, but that's not as big a headline as much as what they said in their letter to shareholders, where they are considering. Actually, this may have been a report from CNBC this morning, but they're considering spinning off their stakes in both Match Group and Angie's List. So they own 80% of Match and 83% of Angie. Angie had earnings this morning, so that volatility is not just from this headline. But this IAC thing is very interesting because the way it was phrased is exploring a possible distribution of its interest in Match Group and Angie to its shareholders. I don't know what that would look like. I imagine it would be some sort of a really big dividend. I don't know, because Match and Angie are obviously already public, so I don't really know how that works. But I thought this was very interesting because they own the majority of the shares in both those companies. So
it's bad for
Angie's
Angie.
Hit on their earnings report.
Okay.
So Angie's down 32% here. It's a disaster.
IAC had earnings and Angie had earnings. Angie's earnings were not good.
Yeah, the Match is the darling here. We know Match has been the darling. It's down here this morning as well because it got downgraded, I believe, from UBS. So they must be locking in some profits. It was a crazy move yesterday. Stock up to $95. I mean, these moves can just get ridiculous. That's why caution of the Roku short seller here, who's maybe saying, I saw it go by my stream on my Twitter line that some people say, oh, I'm shorting Roku tomorrow. It's at all-time highs. I mean, it's a 118. The story has, it's been overvalued for a long time. It doesn't matter. Valuation doesn't matter in this market. And it's just a matter of growth, and it's a matter of whether you're in favor or not. Roku's in favor. So could it be a good call short at 118? Maybe. But I could see the thing going 120, 125, 130. I mean, it could easily do that too. So how do you control risk when stocks are making new all-time highs? I never short stocks making new all-time highs.
And I don't know what the short interest in it is, but that's
think about how many people have been burned trying to short Roku at an all-time high. How many people have been burned? Everyone that has been trying for the last year to short Roku at an all-time high has lost because the stock's making new all-time highs. So yeah, maybe they covered and maybe they called it perfectly. But if you've been holding on to these shorts and saying this story is a valuation issue, it's eventually coming in, you've been wrong. And you continue to be wrong. So it is a very difficult game making money shorting stocks at all-time highs. That's an easy way to lose money, in my opinion.
For this Angie's is just getting pounded here. You're working your way into a big green bar that it had. This was back in May of 2017, where you had a low at that's a monthly low at 570. So I don't think you'll get there today, but they're just a step down seller here. I guess if you're looking to cover short in this one, see what that pre-market low is and see if you get a little bounce. But just an ugly chart here, and
it's a new all-time low.
Yep. No,
it's the exact opposite of the Roku story. The exact opposite.
It's not a new all-time low.
Everybody who's been buying this thing and saying, oh, there's value, or oh, this thing's going to turn around, has been wrong. Every one of those people are wrong because the stock is at new all-time lows. So it's the exact opposite. I'm looking to sell Rips and Angie, buy dips and Roku as trades because that is what is working. What is in favor stays in favor. What is out of favor stays out of favor. Why fight the trend?
Match is interesting here because of the big update yesterday, so a little indecision, but it's right now, it seems, I don't know if there's a big bid or whatever, but it's holding at 89.50, and you could take yesterday's range, a big old range. What was the closing price? I use your closing price in 91.77. It's just, a little bit of resistance on the downside here. If you don't hold this 89.50, this thing can go anywhere. Yesterday's low, 82.32.
Let's
15 minutes, so we have lots of time. There's lots more earnings. Wherever you want to go, Spencer, take it.
How about Stomp?
I was going to go. The top stock on
finally gets a rally off an earnings report. This is like the first time in years.
Number one gainer on my filters this morning is stamps.com. So let's go to that one, up 20% here from their report. The Q2 adjusted EPS $1.25 versus a 96-cent estimate. Sales of $138 versus $128 million. So a beat and a beat. They, as far as the guidance is concerned, they narrow the range for their full year EPS and for their sales, and they both came in, I guess, kind of in line. So that's good.
Enough.
Good
Dogs
enough.
in the doghouse, good enough. That's what it is.
Crazy chart
But
here.
You look at Weight Watchers, you look at the moves.
I know.
I'm not gonna. It's in the middle of nowhere. How do I? So I can't buy this. I'm not gonna buy a stock up 21%, especially a stock that's in a clear downtrend. So I'm not chasing it. And I'm not going to come in here and say, okay, well, it's in a downtrend, I'm going to short the pop, because this thing could pop to $65, $70, $80 and still be in a downtrend. So I can't control the risk, so I move on. There's no trade here.
Yeah, I'm kicking myself a little bit because I was talking with Ryan Craver earlier in the month, and I know he got a little bit wrong after the first gap down, but we had him on the show again. I was talking to him about it. He says he still uses the product. He can't figure out why the street did this to him. I don't know what kind of premium they're wearing the options, but you are officially in the middle of absolutely nowhere on this chart. You got a pre-market high. I'll give you that. The 57.06. You touched over 57 a couple times here. So above 57, I mean, this thing could go. I'm not going to say to fill the gap. It's just crazy. All the way up to 82.61. So it's just in the middle of nowhere. Same for me, man. Hands off on the short side, above 57. This might be. I may potentially buy this one if it gets above 57. I'll give it a stop and probably get stopped up. I don't know. Just looking at that Weight Watchers yesterday, but definitely not on the short list. But Stomp making a little bit of a comeback here.
I have no trade in this.
Okay.
Okay, continuing on the merry earnings parade here with 150. Oh, you know what? We didn't talk. And I wouldn't mind talking if we want to wait for anything. Look at Dish. DISH. That was a huge insider buy last night. I tried to buy it on the headline, on the Edgar filing there, but no dice. I mean, there was just no market in the thing. You could have bought it up. You could have paid up 30, 40 cents, but there was no offer, and you had to get, I hope somebody hits you type deal. And those are hard. There was just no market in it. But look at how big. Do you have it in front of you? There was a huge.
Yeah, I don't have the number in front of me. What was it? Oh, wow. Yes, I do. It was
huge insider buy.
5 million shares or something. Yeah.
Was it 5 million? They bought it 500,000.
No, I'm looking at there's no comma here. Sorry. 500,000. There was no comma in the
Anyways,
500,000 shares.
Who was it that bought it? It was obviously an insider. It wasn't CEO, was it?
I'm looking right now.
I threw you right under the bus because we didn't talk about this.
No, it's okay. They bought in a range of 30.94 to 31.70. That was the price range.
Insider buy 500,000 shares. That's a buy. You see people trade these insider
It was Charles Ergen, so he's the chairman.
All right, so chairman buys 500,000 shares. That's putting your money where your mouth is. That's going to pop a stock no matter what. So this stock has been in the doghouse forever. They're like, I'm sick of it. I'm buying. Look at the chart from the last week and a half. From $44 down to $31. That is an incredible sell-off. Now you get the vote of confidence. This is interesting. So you know what? If you're able to pick this up, maybe you get a little market weakness or something roll over. Get this at $32. I don't mind stopping out at the low of the move. I would stop at the low of the move at $30.58. So obviously the closer you can buy to there, the less risk you have. But I like this. This was overstock. When I originally bought overstock at $9.80 back in June, there was a huge insider buy. It has been straight up ever since. Yes, you can say, okay, well, the Bitcoin rally has helped overstock, and that has been a catalyst. But what really sparked it that next day when we had that big insider buy, the stock rallied over 10%. So Dish is not going to move like overstock. It's a big move already. Am I coming here and chasing it up, 3%? No, but if you get it back, you get a little pullback here on the intraday chart, to the 32 area, I'm interested because I like those votes of confidence.
And I just have one question on that and you probably don't have it in front of you. Has the guy bought before? Like, you know what I mean?
Well, that's interesting too.
Yeah.
This is a huge, when you see 500,000 shares, that's like serious. Because you'll see people that'll come in on insider buys, a director bought 5,000 shares.
Nothing.
I sometimes see it on penny stocks. A director bought 5,000 shares on a $2 stock. They put 10 grand in it. Give me a break. I'm going to chase that? No, I'm not going to chase that. But when you see 500,000 shares on a stock. It was the same thing with ST Zebra when it was in the gutter, and the CEO or whoever it was came on seeing Mad Money, and and he obviously exaggerated because it was an option exercise, but saying they bought 1 million shares, and it was through an option exercise. So it was kind of a little bit shady the way they said it and it came off, but it was kind of technically true, I guess. And the stock popped 10 points on that. So this is a huge buy. It's not as big as an ST Zebra as 1 million shares, but 500,000 share buy on a $32 stock, that is a major vote of confidence on a stock that needed it.
I'm trying to look the last time he bought, and I'm not having.
It's a stock that needed it.
He bought. Oh, he exercised some options in May. So exercised. Wow, that's significant. No,
okay.
I don't know the last time he's bought shares outright.
I mean, don't frown, average down. I mean, I just want to know if that's this thing there. But anyways, let's. We got 9 minutes left. I know we still got a lot on the docket here, so move us along, Spencer.
All right. Well, let's cover this this Symantec news again. Right. There's more chatter now. Broadcom is near a deal to buy Symantec's enterprise unit. Could be valued at $10 billion. So AVGO to buy a unit from SYMC.
Dennis, did you dabble in this one? Because this is like the kind of
I wanted to. And
give that whole scenario.
I thought about putting in my long-term account because I was like, but the one thing, let's talk here. This is different than a takeover. They're only supposedly, and this is still just a rumor, supposedly buying a piece of the business now. They're not buying the whole thing.
Right.
It's not like this is going back to $27, $28, guys. I know Kramer on Mad Money last night was saying he'd buy this thing up to $23.50. That's what he said on Mad Money. I disagree. Sorry, Jim. I agree with you a lot of times. Disagree with you here because this is not a complete takeover here. This is simply just buying a piece of the. I don't know how big that piece is. It's probably a pretty good chunk of it, but they're not buying the whole thing now. So you're buying $23.50, hoping for a $27.28. I think you're wrong. I think you're not getting that. I think maybe Jim didn't even he's trying to do that show so fast. I mean, Mad Money's pre-recorded, right? So he's probably trading that on the headline when he said that last night. But when you really dive down to it, this isn't a takeover. This rumor wasn't a takeover. This was just a piece of the business. Honestly, I think I'd be ringing the register. I'd more of a seller at $23.50 than a buyer. So taking the opposite side of that.
Dennis, give the old return to the point of origin scenario in this one.
So I always like playing that, and I mean in this case you would have lost because the point of origin was 22 and it had continued to leak down to 20. The one thing concerning to me about the Symantec is looking at that FireEye move, and FireEye has been destroyed since its earnings report and continues to leak, and you think, wow, Symantec and FireEye have both kind of been worst of breed. They really have. I mean, you look at CyberArk, you look at Palo Alto Networks, and yes, you can say, oh, they've sold out recently, but really when you bring up the longer term charts, those have been the best stocks. So you're sitting here in Symantec hoping for a takeover. I don't think you're getting it now. What you're going to get is an asset sale, a good chunk of it, so they're going to get some cash or whatever it appears from Broadcom, but it's not the same as a takeover. So don't expect Broadcom to sell off 20 points today. Don't expect Symantec to rally 5 more points. I think the money is there for the taking here. If I was in it, I'd ring the register right now.
Yeah, a lot of people caught too on
people are hoping for the takeover, and they on that headline, that thing, where did it trade up to? It traded higher than this.
It traded up to 2607.
It traded $26 on this headline.
Oh no, not today. No, that's what the last
on this headline last night.
24.53.
Yeah, that's just algos saying, "Oh, takeover, buy." Oh no, it's not a takeover. It's only the company and it's a rumor. It's still just a rumor. Anyways, okay, that's my rant. Sorry.
All right, moving on here. Let's go to Zillow, which I had up on my screen. Let me pull it back up now. Zillow, Z or ZG, doesn't particularly matter. The EPS was in line at a 14-cent loss. The revenue was a beat, $599 million versus a $583 million estimate. I believe they gave some guidance. Let me see if I can find it for you. It's hard because there's 2 symbols here, so twice as much stuff to look through. But I think their guidance was weak here.
Man, this stock is always a huge mover, and
huge mover on earnings.
Yeah, you got to spike down to 40.75, so you're a little bit on the recovery trail here. Do we have a daily low in that area? Not really. I see a 40.51 low back on May 23rd. So that's what I'd be looking at as a potential place to cover short. And then is there someone in 43, Dennis? Because this thing is just sits over the last several brackets here. You just haven't been able to get over 43. We just took over 43 there. Yeah, no, 42.99. I don't know. Seems to be like a little, maybe someone that scooped it up at 41 is just trying to scalp out of it at 43. But you do have some pre-market resistance here at 43. And I don't know who liked Redfin in our show. Do you remember? I can't remember who picked this up.
A couple weeks ago.
Redfin is the online seller. I've seen more signs in my area.
Just life.
Yeah, it is. And it's filling a gap that it had. That must have been from earnings. And that gap goes up to 1991 from May 8th. So maybe 20 here. A little bit of resistance. Did you touch it yesterday? Yeah, 20.01 yesterday was your high. So there's a level, fills a gap, gets above that, got another leg higher.
What about weed here? Chronos, CRON.
Weed is back.
Yep. Chronos.
What's the news on this?
They had earnings.
Oh, Chronos had earnings. I didn't realize that.
Chronos had earnings this morning. So the Q2.
Weed is back. Yeah, I dogged it there a couple weeks ago.
You said it was dead, and here we are. Q2 EPS.
It's coming back, yeah. That Afria changed a lot of things.
A 17-cent loss. That's in U.S. dollars. Versus even in the same quarter last year. Sales in U.S. dollars, 7.6 million, up from 2.5 million a year ago. And did they give guidance? I don't see any guidance, but their revenue jumped threefold on a year-over-year basis.
Still think competition coming for this. I'd be selling spikes on all these.
1582. Yeah, 1582 is where you got up there in CRON. That stands as your high. Still relatively close to that. What do we have here? Do we have any daily highs? Man, $16. Nothing really there substantial. You had a high at you clear 1603. That was your high from July 2nd. Then it opens up to 16.5. But at this point, 1603 looks like a good level. And just with this one too, I remember when that APHA reported, we were looking at 7. It broke down through 7. It pulled off, but ended up taking it out later in the day. So it did rally through that level, just took a little bit of time. S&P's pressing higher here, up 1275, 13 points, let's call it 93.5. Coming up on your pre-market high at 96.50. Really, folks, no major resistance to me until you get back up to Friday's low. That was up at 29.1350.
We have 1 minute left here. Quick look at imbalances. AT&T, 269,000 to buy. I'll look at the chart on that one. You're running into wall resistance up here, 34.50, 34.60. I think I'm fading that if I was trading it. And I might be, who knows. CRM, 39,000 to buy. Disney, 143,000 to buy.
Upgrade.
A long-term account. It's holding up pretty well. That was a terrible report. It's holding up a lot better. I wish it would have got down to 130. I wanted to buy more. I didn't get a shot down there. Might get it yet, but it's getting a lift here this morning. Credit Suisse upgraded it. General Electric, 87,000 to sell, goes down every day even when the market goes up. G is down here again this morning. A dog is a dog is a dog. Coke, 67,000 to buy. I'm just kind of trying to square 39,000 to buy. ExxonMobil, 65,000 to buy. You're seeing oil rebound a little bit. I mean, oil is due for a rebound. Even though I hate all the stocks, we bounced out. So, okay, USO held that 1050. That's the good news here. So maybe get a little relief rally for a couple of days. I mean, Schlumberger, there's a lot of other stocks here, Halliburton. But my thought process here is that maybe we get a little bit of relief for a bit. I think, they're still going lower long term, but I think they're due for a bounce.
Looking through, we haven't discussed ratings for a couple of days. There hasn't been a need to. There are a couple this morning that are interesting. We've mentioned them already. Disney upgraded Credit Suisse to outperform. What else caught my eye is CenturyLink. Wow, upgrading to neutral. Raymond James, okay, contrary call. Elf Beauty upgraded Piper Jaffray to neutral. What else? Barclays upgrading Hertz to overweight. Lyft getting some upgrades this morning. Dollar General upgrade at Goldman Sachs to buy. Also, they're upgrading Westinghouse, WAB, to buy. Looking at downgrades here. Oh, there was one that I saw. Match Group, which we mentioned at UBS, downgrade to neutral. And Caterpillar is the big one this morning. Downgrade at Goldman Sachs to neutral. Price started cut to 130 there. 3D Systems, Triple D as well, downgraded JP Morgan to underweight. So some notable ratings here on this Thursday morning. Any final thoughts, guys, as we kind of head towards
chop, fade. Fade trade is still on, expect chop, but I'm more inclined to buy the dip than sell the rip. I still think bulls are in control.
Oil, boy, oil just took off there. I wonder what there was any news on that. But moving up with the market, no, I mean for me, I'm just looking here, maybe play it on the long side up to 29.1350. That last week's low, a lot of people like to see that. And on a pullback, maybe try and get it somewhere in the 29.80 handle.
All right. If you missed any part of today's show, catch our podcast. It's available wherever you get your podcasts, or we watch our show on YouTube. Thanks to our guest, Mark Chaikin. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. Any questions, comments, concerns, email us at premarket@benzinga.com. And please remember that all the information from our show is meant for informational purposes only, and not meant to be investing or trading advice. Have a good day, folks. Hope you survive this chop. We'll be back with you on